Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Welcome to the show, where we interview the nation's leading real estate entrepreneurs. It's your host, Stephen Schmidt, and I'm back at it like a bad habit. And I got another one from the Chicagoland area here in the studio today. I always love my folks from up north in the Chicago area. It's always a pleasure to speak to them. Had quite a few on the show from all different types of people, well, property managers and inspectors and real estate investors. And today we got a cool one. We got Antoinette Baranek in the house, and she's a really successful mortgage originator. And we're going to get into maybe some tips, tricks, and industry insights from her about that portion of real estate and how it can help you, whether you're looking to purchase a home to live in, or whether you're an investor looking to continue growing your portfolio. So we're going to get into a great conversation here today. But before we do that, just remember, here at Investor Fuel, we help real estate investors, service providers, and real estate entrepreneurs 2 to 5x their businesses so they can build the businesses they've always wanted in order to live the lives they've always dreamed of. With that being said, Antoinette, welcome to the show.
Well, thank you. Thank you. That was a wonderful introduction. Thank you. I'm happy to be here.
You bet. Well, I'm glad you're here. And you've been in, I didn't say how long you've been in the business for, but it was before the 2000s. We'll just put it like that. So you've seen all the ups, downs, and workarounds of every single season practically the last 3 decades. So let's start here. If you could let our audience know, tell us exactly like what got you into the business originally, and then how did things evolve to where you're at now today?
Wow. Okay. So when I started in the business, we had pagers. I'll just start there. I haven't given you years, but I'll let you know. I had a beeper.
I love it. That's amazing.
But nonetheless. So honestly, I was always interested in banking and finance from a young age. And I went to college and got a degree in accounting. And then I started working in the field, and I was bored out of my mind. So a very long time ago, I was speaking with a friend who was purchasing a house. I was in my early 20s. I'm like, wow, this is really cool. That's really cool what they walk you through, right? And back then, everything was paper. You know, you had the credit reports. Everything was hard paper. And that's where my interest started. And I interviewed with a couple companies and then just took a job, moved from Michigan to Illinois, greater Chicagoland area, and never left. Yeah. Amazing. So moved around. I moved around pretty quick, like right away. I moved up into management within a short amount of time, and then I moved into managing a team, and then I moved into the wholesale arena, and then now I'm back onto the retail side of it. So I've been around the block a few times, but I've still been in the business, and I love it.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
As much as it can be an aggravating business and sometimes you just want to rip your hair out and all of that, there's something about it that keeps us here. I think a lot of it's opportunity, being able to be your own boss to some extent, and then doing the right things. I mean, helping first-time homebuyers get into their house. I mean, for me, that's very exciting. Like, that's a wonderful feeling. Or getting someone closing on a deal that maybe someone else couldn't close on, right? They couldn't get it done because of, for whatever reason. And then all of a sudden, you come in and get it done. You kind of feel like a little bit of a hero and you want to put your cape on. But
totally. Yeah. So what do you enjoy most about helping people finance their homes? I'm
sorry?
What do you enjoy most about helping people finance their homes?
I like walking them through this stuff. In our technology age now, so a lot of people are super happy to just sign and click and move on and not read anything. I like to take the time to make sure they understand fully what it looks like, all of the fees and costs, and what to expect through the process. I take the time to do it, even when clients sometimes don't want me to go over information in that depth, right? They just want to sign and move on. Yeah. But the minute I do it and they understand it and then they go to the closing table, it's a much easier transaction and they're very comfortable, because I can't tell you how many times, even within my space, I've seen people go to closing and they don't really understand, and then they get all these random numbers in front of them and they don't know what's going on, and then they're, you never want them to leave the table feeling like, wow, was that really a good deal? Right? Mm. You want them to leave the table like they're a winner, right? They got the house they wanted, they understood the process, they knew what their fees were. And then building from that as well.
Was there like a defining moment that made you realize, like, I'm in the right business at some point in your career?
Yes, absolutely. So after the crash, I was a wholesale account executive. There was no jobs, right? So I ended up working, I took a job at a credit reporting agency. I'm not going to say the name, but I worked in the financial end of it, right? So I had a lot of mortgage clients. So I still stayed in it, and we did predictive analytics and marketing for them. And what I will tell you is data people and data business itself is a much different business. But I did well there because I understood the back end of it, the mortgage business and the finance business. But that whole time I was out, I had people calling me, hey, would you come over and help manage this team? Or would you come over here? And I was like, I'm going to just stick with this for a while. But I wasn't happy. I mean, I did well, but I wasn't happy. I was quite bored. I learned a lot about predictive analytics, automated decisioning and all of that sort of thing. Then COVID happened. And I was like, was working for another data company. I ended up having to find another job, and a call came in, and it was 2020. So rates had just gotten down low. A friend called and said, I need help. I'm like, you know what? Okay, let's do this. Let me get back in it. And it wasn't within 60 days. I'm like, I don't know why I ever left this place. I don't know why I ever left the space, to be honest with you. I love it. I love everything about trying to figure out a deal and trying to figure out your guidelines and how to structure something and make it work or what have you. I mean, for me, it was more about, this is where I belong. This is where my passion is. And as nerdy as that sounds, I guess I'm a nerd. I don't know.
Nothing wrong with that. Nothing wrong with that at all. Well, so like, how do you help clients figure out like what they can truly afford before shopping for a home?
Oh God, yes, you have to go through the pre-approval process with people. So you have to walk them through it. Sometimes it's, helping them with credit. Sometimes there's people where I'll help, we got to start somewhere, and they might not be able to buy a house now, but maybe in about a year and a half they can, but maybe we have to start with credit, and maybe we have to start with understanding income, and then debt as well. But it's usually a pretty quick process. You start an application, you get a couple pay stubs, understanding their income. But not everybody gets paid a W-2 and gets a pay stub. There's a lot of self-employed people out there as well. So sometimes you have to do a little bit more digging.
On that note, I think a lot of a lot of the audience of our show, at least, are generally 1099 income earners. I mean, I'm a 1099 income earner. Pretty much everybody on my team is. So, like,
I think it's
my
awesome.
business outside of here. So, and it's great because there's a lot of benefits to that on the tax perspective. But like, there are some hairy challenges when it comes to purchase of property, especially for like real estate investors, right? So,
Yeah.
on that note, like, what are some of those misconceptions some people have about, like, oh, well, if I don't have a W-2 income job for at least 2 years with consistent, you know what I mean? Like, what are some of those misconceptions in your industry for those that are 1099 looking to either get into their home, get into a new home, or get approved? What are some of those things that pop up?
There's a multitude of products that you can use. So as self-employed people, we a lot of bank statements. So there's a product where you analyze bank statement deposits and you use that for qualifying purposes. And you can use whether it's personal bank statements or you can even use your business bank statements. So you can use that. There's some products out there you can just use a 1099. There's products out there where you can just give an audited profit and loss statement and you can use that. When it's a non-traditional product, the only thing that you have to keep in mind that, because there's a little more risk than it is with a traditional mortgage product, you're typically going to have a bit of a higher rate and you'll probably have to come in with more money down. But I think it's kind of understood, especially when you're not able to show that you earn on your tax returns or, you're receiving a steady W-2 paycheck.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Yeah, but there's plenty out there. There really truly is. And there's plenty out there for people who just do it as their business. There's plenty of people who have real estate LLCs. They buy in an LLC. It reports under the LLC, so it's not on personal credit. There's a ton of that going on as well. But those are the investors that actually buy more than one property. They typically have like a few. It's anywhere from like 2 to 10. But
So can you, on that note, like, I actually have more of a personal question than anything, so I can get some deeper understanding.
With anything you got.
So, like, can you break down the difference? Because I think people are starting to, I don't know what the right word would be or exactly how to say it. Not so much awaken, but I think people are starting to realize, for whatever reason, almost 20 years later, like, oh, this is why the crash in 2007, 2008, 2009 was like really prevalent, et cetera. And one of the big things that pops up, a big buzzword right now that people are kind of scared of is an ARM, right? Adjustable rate mortgages. Can you like break down the differences between like fixed rate and adjustable rate mortgages and how they work and like when it would be appropriate to have one or the other?
Yeah, I can actually share a story like in the very early beginnings of my career. So my very first LO job, very first one. I think we were selling rates like at 7.25. It was like 7.25. We'll just
Which,
say
by the way, is what they are now. Not everything gets more expensive with time.
So there was this, and then we started having this rate increase, and it was pretty substantial. Not like the one we had a couple of years ago, but it was pretty substantial. And so then, as a salesperson, or really, I didn't even see myself as a salesperson, I started asking questions like, what's your intention with this home? Are you going to stay in there for 30 years? You want a 30-year mortgage? Actually, no, we aren't going to be in the home more than 3 years. I'm like, well, have you considered a 5-year ARM? You're going to get a lower rate. You're locked in for 5 years, and then it becomes adjustable. And you have to be able to explain those adjustable margins and how those work. But there's a lot that's set up that protects the consumer, even if you end up in an adjustable rate. Like you go past your initial fixed period of 3 or 5 years or 7 years, right? And then all of a sudden something changed and you're still in the house. You can always just refinance into a fixed rate, but even the adjustments are very limited. So it's not like you're going to go from like a I don't know, a 6% interest rate, and all of a sudden it's going to go up to 9%. It's a very limited, and they're very capped.
Sure.
So it's not a substantial increase, but they're
Right.
certainly, and if you're one of those people who think the market, like rates are high and that rates are going to come down, which we all certainly believe, maybe you would take an ARM knowing that you're going to refinance in the next, 3 years or so, waiting once the fixed rate opportunity presents itself. But
That's a good point.
yeah, so a lot of times people just asking the intention, what are you going to do with your home? Like, do you want to keep it for 30 years? And then it's also, payment's very important. So maybe having a lower payment for the first 3 years is more important than having a fixed rate. So.
Sure. So what are some things that investors should be considering with the different types of loan products that are out there? Do you work with investors quite often, or is that kind of just as a case by case basis? Like, how much of your business would you say is retail versus like investor buyers?
I would say investor buyers, it's about 20%.
Okay, sure.
But, and I'm sorry, the question was, what would be my...
Yeah, so like what are some things that people that are investors that are actively investing in real estate to make a profit, not because, ultimately everybody's investing in real estate. I don't believe that personally if you buy a house, but like the people that are in it as a business, right? What are some things that they should really be considering about the different options and loan products that are out there when they're going to get their next loan?
There's a lot of short-term loan products, especially if you're buying investors. Investors will typically look for a home that needs needs some work, right? So they're going to get it under market value. They know that they're going to sell for a profit after they go in and do whatever it is that they're going to do to it. There's some 6-month loans and 12-month loans available for them where they're not having to take out this 30-year fixed mortgage and they've got to come into this big construction or rehab loan, right? Because those are a bit of a process as well. But there's short-term loans that they can take just to get the property into a condition where they can sell it. And that's typically what an investor does. Either they come in, they buy undervalue for whatever reason, the property's undervalued. Typically it's because it needs work. They bring it to a point where it's, habitable. They either sell it for their profit or they keep it and run it out and then just continue to build equity and then build their book of business that way. But I think a lot of people think that there's just a one path, like, okay, I'm going to have to put 25% down. I'm going to have to take out this mortgage, and then I'm going to have to take out another loan to figure out how I'm going to get all this work done to the property.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Lot of product out there that helps you buy the property and base it off of the actual future value of the completed rehab property, and you use that as your asset and collateral that you lend against, and then you pull money from it as you continue to rehab the property or update the property. So
Right. Yeah. How often do you, because I know a big deal for a lot of investors is using what's called the BRRRR method, if you're familiar, buy, rent, rehab, et cetera, refinance. And so do you see investors tapping into things like HELOCs in their properties? Is that something that the mortgage side of the business handles? Or like, what are some of the unique things that you've seen investors do throughout the year to get creative, to get access, maybe even just to more capital to continue growing their businesses via the traditional bank route? Because that's what you're in, right?
yeah, but we're a mortgage banker, so we have access to other products outside of what a typical like bank, like your big block building bank would have.
Totally.
There is a lot of HELOC product that's
What is
being
that?
offered.
What is a black building bank? I've never heard that term before, actually.
I'm like like I don't want to say names, but like your big banks that sit on the corner, and they're
Okay.
yeah, so they're limited to whatever they have. But as a mortgage banker,
Sure.
you have absolutely more options there. But
What's the difference between a mortgage banker and a mortgage broker? I'm interrupting you a lot, but this is
I don't
sparking
care. You can
questions that I'm
totally
like,
pepper me.
interesting. What's
So
the
a
difference between a mortgage banker and a mortgage broker?
A mortgage banker typically funds their own loans, right? So they fund them. So there's more risk for them. So they have their own underwriters, processors, funding team. A lot of times mortgage bankers also broker loans, because we do that as well, because there's some stuff that we're not gonna put on our bank lines, right?
Totally.
But typically the mortgages don't. We can retain servicing, but we typically end up selling the mortgages in the end, right? Whether it's Fannie, Freddie, or whoever the end investor is, but we'll retain the servicing on it, but we actually are the ones that do the underwriting and then the financing at the table. A mortgage broker has the option to send it out to lenders. They work with multiple lenders as well. All lenders have different regulations, guidelines, products, programs, or whatever. The mortgage broker can send that deal to that particular lender. They underwrite it and they fund it. I just prefer, I know there's some places they love that broker model. They just love it. I prefer the banking model just simply because I feel like I have a little bit more control over the process. I have a little bit more control over, making sure it closes on time. I don't want to go to a third party that I don't have a relationship with and say, hey, can we close this a couple days early, or whatever the situation is, right? I want to just have a little bit more control. But when I do broker loans, we just have to work through their guidelines. I just try to manage expectations better. But normally I'm,
Totally.
wanting to push things to close much faster. So
Sure. So what advice would you have for buyers in today's market? What would be the biggest piece of advice you'd have?
depending on your location, I think there's a lot of fear. There's a ton of fear going on right now. There's a lot of people sitting on fences right now that
Let's
don't
focus
buy.
on, before you answer that, let's focus on 1099, like self-employed people, just because that is an audience, and that's more of a selfish thing for me, because eventually I'm going to buy a
Oh,
house.
sure, for sure. I didn't. Absolutely. Personally, I think that knowing if you're a 1099 individual and you're wanting to own a home, right? You can certainly do it. You should come in with the thought knowing that you're probably going to put a higher percentage down. You're not going to get a 3% down payment type deal. You're probably going to get between at least 10% up to 20, even 25%, depending on what your intentions are with the property. I also think that investors should not shy away from properties that need a little work. I've seen more investors make money by taking on properties that might be a little challenged, having the right people at the right price doing the right type of work, and then flipping those properties over. I think that's also something that should be considered. But I think you shouldn't be afraid of trying to go out. If there's a home, you want to own a home, and even though you're 1099, I think you should still do it. Just be prepared that you're not going to get the best interest rate, and you might have to put a little bit more money down. But if you take a look around at everybody, and you take a look around at even other investors, like use somebody that's been a real estate investor for a long time, and then look at their wealth. Look at how they built their wealth. Did their wealth come from their W-2 job? Maybe. Or did it come from the fact that they gained a lot of equity in real estate, or they were fixing and flipping, or doing a combination of both? But absolutely, I don't think anybody should shy away from it. And I think interest rates concern people, and there's a lot of talk in the media, and I think the media is sometimes not a friend to us at all in any way, shape, or form. I think a lot of misinformation comes out. All these foreclosures are happening. Like, you'll get all this negative news, like, oh my God, values are going backwards. It's not really happening. It's still not happening. Just FYI, there's still a housing shortage out there. Maybe particular areas, but for the most part, it's the quickest way to gain wealth.
Sure.
Absolutely. Hands down, the quickest way to gain wealth.
Well, Antoinette, we appreciate you coming on the show and sharing some insights. Where can people connect with you for more if they want to learn more about you, or see what you're working on.
Can I give you? So the best way to
reach
reach me
all
is
7 million of our listeners to call you. You can drop your cell phone, but
I know.
no,
I
I'm just
could
kidding.
leave a cell phone.
It's
or,
always funny when people do that, and then I say, "Hey, I know you don't know this, but we do have 1 million listeners, and
No, I know
like
you.
you're probably gonna get called a lot now." And they go, "Oh no, could you edit it out?" And I go, "No." So, I'm just kidding, but really, like social media, website, things along those lines. Those are usually the best resources, probably to share for folks. We do have a large audience, but that's why I say I'd probably not give your personal cell out, but.
There's also email. The other challenge is my name is not common. It's Antoinette Baranek. So it's Antoinette.Baranek@spmc.com. So that's Sierra Pacific Mortgage Company, SPMC. So it's Antoinette.Baranek@spmc.com. Or yes, I have my LinkedIn. I'm Antoinette MB is my Instagram, and then obviously Facebook, Antoinette Baranek. I have a business page as well. So I'm everywhere. As far as that goes, you should. If you can spell a name, you'll find me. I promise.
You'll be able to spell it because it's going to be on the title of the show notes, folks. So just go look for it there and then go at the SB, whatever it was she just said.com. All righty. Well, anyways, we're super appreciative for coming on the show. And thank you guys for listening.
The opportunity. I think what you guys are doing is awesome. I think it's wonderful. Just getting the information out because, again, we're dealing with sources that maybe aren't necessarily giving us all the right information.
Totally. Well, thanks so much for hopping on. For those of you that want to connect with us for more, obviously go follow Investor Fuel and the Real Estate Pros. I know if you're returning to the show, you're already doing that. But if it's your first time listening, I know you're going to go drop us a follow. We're going to be your go-to source for all things real estate. And we'll see y'all in the next episode.
Thanks for joining us for today's Real Estate Pros show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.